Good morning, Star Traders. Phil C here with you, professional trader at your service. Today is a busy one in the markets. Lots of movement, lots of potential setups to look at together. There's a theme to this one, and it's patterns. So if you are in love with pattern trading as much as I am, then you'll love this episode. And please like and love the video for me too, and please subscribe. Also, you will fill my heart with more love. We have about 5 pairs of potential profits we're going to take a look at right now, and always, thank you for being here with me. I'm truly grateful to have another day here with you too. Let's spend the next moment going over my portfolio and taking a look at the markets for the week ahead. A bonus in this video somewhere using patterns as entries for trend trades, which give amazing risk to reward too. Before we switch over, I wanted to thank all the new members for joining the Star Classroom. And we have some new private clients I've talked with this week and have signed up for the Star Trader 2.0 14-day trial. So look forward to seeing you in the live trading room, where we trade the live markets together. All right, and if you haven't, I'm not sure why yet, I've removed all the risk for you, and once you do sign up, you'll have access to everything that made me consistently profitable in the markets. So I highly encourage you to take advantage of my STAR proprietary method for a free 14 days below. And I'll work with you every step of the way so you get results that you deserve to have. Start using it today. Link is below, so take advantage of that while it's there. Let's go to the charts. All right, you know what, traders? I'm quite proud of my website. Yeah. Want to learn more about me? Head on over to starprosper.com. It's got all the information about me. All right. Here we go. We are at the euro dollar right now. Actually, what I'll do is teach you how to identify the bat pattern and how to trade it, actually. Do I have time? Let's see. Right, so with the bat pattern here, this is still valid. Again, we're on the euro dollar daily time frame. This is still valid because we haven't violated our highs looking left right up here. Let's get rid of this right there. So price action hasn't violated our swing highs right here. Okay. That means we have a potential bat pattern if price action can make its way towards the downside. Because right now, I've already made money on this one here. If you've been following me in the live trading room, you know that I did a YouTube video on this anyway. You know that I had the cipher entry. We hit target 1 and then I got stopped out for break even on target 2. So, you know, that's the end of that. But yeah, we still got a valid opportunity here if price action can head towards the downside. Now, if price action does move towards the upside here, because we don't know what price action is doing. If we could 100% predict price action, we'd all be multi-trillionaires. That is not how we do it. We play the probabilities, right? That's why I'm about 50% accurate on my strategies here. And as I always say, if you're over 1-to-1 throughout the entire year, you're doing incredibly well for yourself. That's all we need, right? Then we can be a consistently profitable trader. But we don't know with absolute certainty where price action is going to go from here. It could skyrocket above these highs right there. And then euro to the moon, right? That can happen. But if we do get price action moving towards the downside, then we can still buy it up. We still have an opportunity here. But it's not, what we would have to do is redraw it, right? Because we have a new lower low right here. So let's zoom in like this. We'll grab my Fibonacci retracement and we will go from swing low to swing high right here. like we did before. Okay, so price action coming up like this. And instead of our B point down here, what we're going to do is drag our line tool, one of the best charting tools there is on a charting platform. This line tool right here in trading can make you a lot of money. It's a very powerful and incredible tool to use. Our new B point is right down here because that is our lowest low. Okay, from a Fibonacci from swing low to swing high, this right here is our lowest low. So right now we have to watch this candle right here. And then from this C point, so here is our B point, this is our C point. Now, if price action can move all the way down into 886, so yeah, I mean, you could say that I have a genuine bearish bias on the euro dollar. If we do get a move down there, that would be the new pattern M formation that I would be looking at. Right there. That's the new opportunity on euro dollar. Again, we still made some money with this one on a lower time frame in the trading room, so that's good. That's euro dollar daily time frame. Euro yen, we have been pretty accurate in terms of technical analysis on this pair. How? Reading price action, reading the candles, reading the language of the market. So right here, price action did drop down to a 4-hour. See it more clearly here, like this. I've been watching euro yen, daily time frame. Still waiting for this cipher trade to play out. Just need a little bit more towards the downside, right? That is what we're waiting for. Price action coming all the way down like this, okay? We close below the lows, looking left, right there. Price action comes up, retests that level right there. So retest this level of structure right there. Look at that. Got structure here towards the left, and then a little bit in here, and then here, and then here. Right? Price action after a new structure low right there, we get a pullback, and then we get another drop towards the downside. Right? And then what do we get? Another close below looking left. So price action may retrace back up into this level of structure right here. And with any luck, depending on what's happening with price action, we may get another move down. Okay. So this would be within here. This would be a trend continuation trade, excuse me, within that move. And then if price action moves all the way down into our 786 there, this is a valid buy opportunity for the cipher trade. So this one here, we're paying attention to this one. We may get there next week through our week of trading. But right now we're just watching, being patient and waiting for that. Euro yen cipher trade. This is on the 4-hour time frame. Over on the pound dollar here. I went to the daily time frame. We get price action breaking above this high structure right there. Previous resistance becomes new support. Okay. Price action comes down and then immediately bounces from that level, right? Because what does this structure tell us? Well, if price action hits that level, most likely we get a reaction out of it because that's what history tells us. So if price action comes all the way back down, hitting that same level, we may get a similar reaction from price action. And therefore, we do towards the upside right there. Now, what am I looking at here? I will go to the 4-hour. Drop down a lower time frame like this. And we're going to go over the bat pattern right now. Just make sure that it's easy to see. I will get rid of this. because we don't need that one either. Right there. So let's identify this bat pattern right now. So here is my high, right there, okay? So this is my highest high, previous highest high, and I'm looking from this high to this low, right? This is where my impulse leg will be. Let's draw it with our $1 million tool, the line tool, from swing high all the way down to swing low, okay? Now with the bat pattern, paying attention now. With the bat pattern, we grab our Fibonacci retracement tool, right? So from our impulse leg here, we go from this swing high down to our swing low. And when you're drawing the Fibonacci retracement tool, it's not from the bodies of the candle. We want to do it properly. It's from the wicks of the candle, okay? So swing high all the way down to swing low. What we're looking for a bat pattern is for price action to come up into a minimum of a 382, which is right here. Price action has a pullback and we hit the 382, okay? So we have this criteria met. The next thing that we want to look for is a Fibonacci retracement. I'll just scroll down like this. Fibonacci retracement from this low now to this high, right? So swing low all the way up into swing high. What we're looking for now is a C point, so price action to come all the way back down into a 382. So we have a 382B point and a 382C point right there. And the last thing, so condition 3 for a valid bat pattern trade is we're going to take the Fibonacci retracement tool and go from our first swing of the move, right? This high down to this low. So we have a swing high all the way down to swing low, and we call that full leg of the move, right? Okay. So we have full leg of the move right there. Swing high to swing low. What we're looking for right now, this bat pattern is only just valid, okay? Because price action comes up, retesting this high. Now, if price action, this candle right here, closed above this high, right there, if price action closed above this high, then it's no longer valid, right? So, now that price action has closed below our swing high, which is our X point right here, this has a very nice risk to reward on market open. So that's really good. We want price action to come all the way up into the 886, giving us a D point completion for this criteria to be met and to have a valid bat pattern trade, which we do, right? So here we are. Here we are. Price action comes all the way up into the 886. That is our W formation, right? And if you like using one of my other favorite charting tools, the triangle tool, it would look like this. X to A to B right here, B to C, C to D right there. Okay, so this is the valid bat pattern opportunity at market. Soon as market opens, boom, it's an execute. It's a sell right here. Because anywhere within the 886, so draw in a box tool now. Yep, another one of my favorite tools. Draw in a box tool. Anywhere within this rectangle is a sell. Okay, sell zone. Oops. Sell zone right there. Okay. So if price action moves up into the D point completion here, which we are, and we're in this box, which is a great risk to reward, we can sell it. It is a valid sell opportunity in there. Now let's talk about risk reward. Okay, so right over here, we need our stops above our X point. What we will do for targets, so here is our entry, right here. That's our entry. So we have our stops above our X point, and now we want to look for targets. So paying attention, Fibonacci swing low, all the way up into swing high. Okay. And let's grab our dealer thingy, the one that makes money, right here. We drop it right there. Okay. So stops are above the X point, looking left, right? And then you want to give that a bit more breathing room. And then you want targets right at the 382 right there. So almost a 2-to-1 risk to reward on this trade. Why? Because price action is pushed up right near our X point, near our highest high, looking left, excuse me. So here we go. That's target 1. Really, really nice risk to reward on this trade. And then we want to duplicate this. And for target 2s, we want a 618 Fibonacci retracement, okay? Right there. So that pattern has over a 50% accuracy, a strike rate, whatever you want to call it. And then, because we have really nice risk to reward on this trade, over time, as you can see, we have a valid bat pattern trade. 50% accurate on a really good risk to reward right here. So you can see over time, trading doesn't have to be complicated, does it? All we have to do is pick a strategy, one that we like, just be half right on that strategy. Have a decent risk to reward every time we execute that trade, as you can see in front of you. And over time, throughout trading it throughout the entire year, you will be profitable. There's only one flaw: coming in every single day and trading that with absolute discipline. If you can do that, then you can be consistently profitable, right? Because now you have a winning system. And that's what trading's all about. This is the opportunity that is at market that we can watch and pay attention to, looking for target 1s and 2s right there. If you want a in-depth guide on what we just covered, how to trade the bat pattern, more importantly, the entry, stops, and targets, you can grab it right now below for free. I'll teach you how to make money with this consistently in the markets over and over and over. Dollar CAD. Now here's what I was mentioning before. This is a really nice trend continuation trade setup. As you can see, price action on the daily time frame. We have our starting point up here, okay? Price action comes down. We have a pullback. We get a retest of this low. Price action heads towards the upside. We get a retest of this high. So we're channeling right there. Finally, we get price closing below this low looking left, right? Right there on this candle. This indicates to us that price action is heading towards the downside, right? Now, what we can do here is look for let's do this. We can look for a trend continuation trade towards the downside, okay? What I want to look for is a really good risk to reward. Again, we're only half right on these things. So if we can get a risk reward that's in our favor, and we do that over and over, then we're going to be in a very healthy position. On the daily time frame, heading down towards the downside here. So what I want to do now is drop down a lower time frame. Let's go to the 4-hour right here. Okay, so here is our highest high right up here, and here is our lowest low right there. So what did we, paying attention here, so what did we learn and what did we cover from the euro yen? Well, that is our impulse leg, okay? Swing high to swing low. So what do? We grab our Fibonacci retracement tool. We go from swing high down to swing low. We're looking for 382 right here. Price action comes up, hits the 382, right? So that's criteria number one. We get that. The next is Fibonacci swing low to swing high. We come down and hit the 382, right? Then lastly, we want a Fibonacci retracement again from swing high all the way down to swing low right there. Now, if price action moves all the way up into our D point completion, we get a valid bat pattern trade. Do we hit it right now? No. We hit the 786. What we want to do is wait for price action if it hits the 886, because it could drop right here. Right? It can just plummet right now. But if we wait for that 886 and we stay with the underlying trend, which is bearish, then we have a really, really nice risk to reward, because we wait for the bat pattern to complete here. And the big difference is, the bonus part is, we're not looking for the traditional pattern targets anymore. What you're looking for is the trend continuation trade targets. And I've demonstrated this over and over, and it works really well, right? We use the bat pattern for a really nice risk to reward setup. So let's do that together right now. If price action can move up into the 886, we grab our dealer right there. We would want to enter at the 886. So now we have our entries, right? Again, for the trend continuation trade on a higher time frame. So we have our entries. Perfect. Where are our stops going to go? Now we have really good stop placement. We have a 113. That's where our stops go, above our X point looking left, right? And now our targets. So let's copy and paste this. Target 1 and target 2, we will head back out to a higher time frame. So we go on the daily right now. And we're looking for that bearish move, aren't we? Okay. So what we're looking for is, if price action can come all the way up into our D point completion. Can you see this? Make it a bit bigger. We want to look for a retest of the lows, okay? So target 1 is all the way down here at a retest of the lows. And as you can see, it's a really good risk to reward. You have almost 3-to-1 on target 1. An incredible risk to reward. And I have seen these play out over and over. That's why we test it, and that's why we trade it, because it works. Incredible risk to reward setup, but you're combining two strategies. You're using the bat pattern now for a case for entry for a higher time frame trend continuation trade. And this is what you can get some really nice home run trades when you combine strategies like that. Okay. If we're going to move up there, we're looking for a sell right here at the D point completion. Okay. Now, if we're wrong on this trade, then we want to hit our stops, don't we? We want price action to hit our stops if we're wrong on this analysis. Because if it does, if we come all the way up, right, we can get a retracement, and then we can get a move towards the upside at retesting these highs. So we want to get out here, not all the way out here. We want to preserve our capital as much as possible. That is what professional traders do. So if it hits our stops, we're wrong initially on this trade, and we just want to get out of it. And that's what we'll do. So target 1 is down here. Where is target 2? Well, let's take our swing high and our swing low, and we'll go for the Fibonacci extension tool. Swing high all the way down to swing low, back up in, right? And now we're looking for target 2s all the way down into the 127 Fibonacci extension. That's almost a 5-to-1 on target 2, right? So if we get a move up, we're looking for an incredible risk to reward on this dollar CAD trade. Combining two strategies together can be very powerful. For those of you who, I'll say this, for those of you who are put off by the subscription itself, if you wish to, you can sign up and take all my material that I have and then cancel the subscription if you want to play it that way. I don't mind. No questions asked. If you wish to do it that way, that's all right. But I still gave opportunity to have access to everything that I have. And if I can give you value, then I'm doing the right thing. And I'm helping out as many people as possible. Okay? If you want to do that, by all means, you can play it that way. I don't mind. No questions asked. But please, I highly encourage you to take advantage of everything that I do have. Because I promise you that you'll love everything that I've got for you. All right? Aussie dollar here. Ah, yes. And if you've been following the videos that I've been putting out, made some money back from the Aussie dollar. So we did fight back against the market. We did punch back, and we did get some nice profits off here on a lower time frame. There is a potential bat pattern setting up right now if we get a move towards the upside, right? Aussie dollar right here. Looking at this swing high. So again, it's a similar setup here. Staying with the theme of the episode. Here is my high and here is my low. Okay. Right there. So let's take our line tool and let's go from swing high to swing low. We have a Fibonacci retracement like this. Excuse me. Price action comes up, hits the 382. We come down, we hit the 382 as well. And now all we're doing is waiting for price action to come up into the 886. And the Aussie dollar, that pattern setup would look like this. I draw it in for you to see. CD, right there. Now, if price action can come all the way up into the 886, this is where my entries will be, okay? Right here. Stops above the X point looking left around the 113, right there. And targets will be a Fibonacci from swing low to swing high at the 382, right there. And then we copy and paste that because we always go for two targets. Right? Always go for two targets. Target 1 is 382. Target 2 is down at the 618. This is my potential bat pattern trade on the Aussie dollar. If price action can move towards the upside, then I'm looking for an entry right here at, what is it? 60, let's say 67 800s. Okay. This is my selling level of interest, and I'm looking for double targets right there. Over on the Aussie yen right here. Still currently in this trade, we don't have to do anything with this one. We just sit on our hands and wait for price action to do its thing right here. Aussie yen over on the daily time frame, waiting for target ones. Right, we're halfway, almost 3/4, just shy of that. We're almost at our targets for target 1. Okay, make sure that we've got the right measurement right there. All we have to do is wait, see if price action can come down and hit target 1. If we do, here's the rules. If we do come down and hit target 1, you take off half of your position and then you roll stops to break even. And then you wait again and be patient, because price action will either hit your stop for break even and then you walk away with a winning trade, put some profits in your pocket, and the trade is done, or price action will head down a little bit lower giving you target 2, which would be, be about 650 pips on that. Quite a beast of a move right there. If I could type properly, that would be great. Over on the Kiwi dollar right here, again, we wait we wait and have patience with this one. There's also a winning trade in here, actually, on the lower time frame. It's a bit of a mess right here. Clean it up. Speaking of patterns, there's one in here, sneaky. So if I grab a Fibonacci retracement tool, swing low to swing high, you can see what a really nice trade that is. We have price action right here. We come down 382, okay, actually 50%. Then we come up, and then we come all the way back down, and look at that. We just touch the 886 right there. Price action comes down. We just touch the 886, so that gives you a valid pattern right there. X to A to B, and then B to C, C to D right there. Price action comes down, gives you a valid buying opportunity right here. So this would be your buy zone. Make that green right there. And then immediately, as price action comes down and touches that 886, giving you a valid trade. As soon as price action comes down and hits that 886, immediately retraces and bounces right through target 1 and target 2. Okay, so that's a really nice winning trade within there too. Okay, but back over on the daily, this is still a waiting game from here. Still a waiting game right up here. This is the 886 that I'm waiting for and paying attention to on the Kiwi dollar, but we need price action to move up just a little bit more to give us that entry right there. So patience. If not, if price action decides to head towards the downside and close below these lows, well then it's more of a patience game as well, because we would have to wait for price action to retrace back up into this level and then look for another trading opportunity. Whether that would be another pattern trade or whether that would be a trend continuation trade, something within our trading plan that would give us a valid trade for us to execute in the marketplace. So today was a busy episode. I realize that. We did cover the BAT pattern, the rules there. So if you do want a more in-depth guide to how to trade it, identify it, entry stops and targets, and to make money from it, yeah, do check out the link below and take advantage of that. I'm sure you'll love it. And there's also the cipher trade in there, the Gartley, the BAT, the butterfly, entry stops and targets, when it's valid and invalid, highly important. Using the 113 stop placement or the ATR stop placement. It has a ton of material in there for you to enjoy, right? So have fun with it, practice it, use this video as a reference point to continue practicing the BAT pattern on your own in the charts. And again, have fun with it. That is one of the reasons why we trade, other than looking to make money and make profits in the markets. That'll do it for another episode of STO. Sincere and genuine thank you to all the new stars. Going to wrap this up and send this out to you before the market opens. And for those of you with me, look forward to seeing you in the live room as of Tuesday. Everyone else, I will see you in the next episode. Until next time, be safe, enjoy life, and I'll talk to you soon. Thank you so much.